How's it going? I'm Andrew with Investors Hub and super excited to have Matthew Peterson back on the show. He's from Peterson Capital Management, and he's going to be talking about the upcoming Jackson Hole Summit, along with, quantitative tapering and inflation fears that go with the summit. And he's also going to be discussing a company that he thinks is really interesting over in China. So he really likes international investing, and he has an interesting perspective on different ways to get good deals on companies overseas. So if you like the video, please be sure to like, comment, and subscribe. You can follow us on Twitter at ihub_vision, and some links to his stuff will be down in the description below. And yeah, after a quick disclaimer, we'll hear from Matthew. Please note that our videos are not designed to be direct investing advice. Our channel and our content should just be one stop on the journey of trying to find out where to put your money. So we learned, I believe on Friday, that the Fed switched the Jackson Hole Summit from being in person to being virtual. Now, do you think that this is a dovish signal from the Fed? I know that a big question in their mind has been, what they're going to do about the Delta variant, how they're going to handle monetary policy with this new version of COVID flowing about. But if they have decided that they don't want to meet in person at the event, that says to me that they're concerned about what's going on.
I think that's a really interesting observation, Andrew. So nobody has a crystal ball, as I think I've said on your program before. So you sort of have to view the future, especially macroeconomic events, with probabilistic thinking. And I don't think the Fed knows exactly when they're going to make changes. So it's not like anybody could realistically know or predict precisely the future. Some people don't know that they don't know that, but that's the reality. But the reason that that's your observation so interesting is, I expect the Fed over time to be moving from sort of their dovish stance to a more hawkish stance, because we do see inflation ticking up. We have been having a lot of stimulus in the market, and I don't think we necessarily need this much stimulus. And we're also going to get a bunch of new stimulus coming out of the federal government very soon with the sort of infrastructure bills that are likely to pass. So there is so much money in the system. It's probably wise for the Fed to start thinking about when they're going to pull back the reins a little bit. They're basically providing stimulus. What we're saying is sort of maybe not quite as much stimulus as probably needed anymore. It's realistic to think if they are going to cancel the summit, it will put a dovish tone into the minds of most of the folks there. I think that they'll probably be able to overcome it, but it's a very interesting observation. They are trying to be careful. They're also trying to signal to society, I think, what they want behavior to look like. But if I had to say, is it dovish or hawkish? I mean, it's dovish, and they're being very conservative. The biggest fear, as you know, is that they'll be behind the game politically if inflation really does move up and it's a systemic move. If they don't move fast enough, they'll be behind, and interest rates would have to go higher in the long run to counteract any delays.
So inflation and interest rates, when tapering, are what's on everybody's mind. All eyes are on the Fed right now. So what kinds of signals are you looking out for from the Fed for them to change their stance and how they're going to handle things? I know that it's probabilistic, right? Is that it's not like this is the signal and then that means red light, that means green light. But what are the kinds of things that you're looking out for?
Well, the first thing they're going to do is they're going to taper their bond purchases. And so you even have folks like Treasury Secretary Janet Yellen sort of talking about when this is going to happen. Personally, I'm not trying to time my portfolio around some macroeconomic event. We kind of know and understand that at some point rates will change. And so I think, I watch, September 21st, I think, is the next FOMC meeting. And so we'll just watch the press releases. We will watch, what Jerome Powell says publicly, and we'll look to see if rates look like they're going up or down. But it's actually not going to change our portfolio. Our portfolio is long-term compounders, And so whether or not rates are at 1% or 0% or 2% is going to be irrelevant for these positions.
So speaking of which, what stocks are you watching in the market right now?
That's a good question. Well, I recently actually did an annual meeting where we discussed a few firms. We typically don't go too public with it all, but there's one really interesting story that I'll throw out there. And because we mentioned the Chinese market just before we started recording, there's something that I'm watching pretty closely called Tencent. Tencent is the largest company in the Chinese exchange, and it's been beaten down quite a bit over the last couple months. And it was already extremely, extremely inexpensive. They actually have about a $300 billion equity portfolio, and they're under a 600 billion market cap. So this core business of theirs, which is WeChat, is amazing. And through a very strange systematic situation, there's a company called Naspers in South Africa that owns a little more than 25% of the business. And they are trading at a further discount, quite a significant further discount to Tencent. So you get a very cheap company in China, and then you can actually buy it through another entity who owns that business. And that whole entity is selling for about a 50% discount to just the value of their Tencent stock. And they own other things as well.
So any final thoughts?
Final thoughts. Yeah, I think I do. I would encourage any of your viewers to really focus on the long term, because rates will go up. Rates will, at some point in our lives, end up going back down. And these sort of movements are relatively unpredictable. I think you can err on the side of expecting quantitative easing to relax and to have interest rates increase. But by keeping a view on the long term, you'll end up with a greater outperformance to the market.
So where can people reach you? And are there any disclosures? Do you have positions in any of the stocks mentioned?
Let's see. So I can be reached at Peterson Capital Management is my firm. So petersonfunds.com is our website. We also have a YouTube channel where people can view our recent annual meeting. And yeah, we do have, I think I mentioned Naspers, and we do have a position in Naspers. What do we say? This is not investment advice.
Hey, thanks for watching, and be sure to like, comment, and subscribe if you hadn't already. It helps the channel grow. It's the absolute best thing you can do for us, and I'll see you again soon.